Good morning, everyone. Greg here, Master Trader. So we're ready to close out July here, and as we go into August, the most active month as far as vacations go historically, and could be a quiet time in the market as many are away and to close out the last month here in the summer. But we are at the end of one month and the beginning of the next. Excuse me. And historically, it's usually a positive sign of the market theoretically to say where money flows come in at the end of a month and get put to work at the beginning of the month. So we'll see. Overall S&Ps here are in an uptrend and going sideways. So, bullishly, except, we're going to take a look at the sentiment internals, which we talked about last week. So we'll see. Right now we're in a little trading range here, and just put that up there, and let's just get things set up here. Okay, so we got a little trading range going on there, uptrend, intraday chart coming up into resistance, and so we'll see. We had that nasty break last Thursday in a lot of markets and stabilized, here and kind of trying to churn its way back up. So from the point of view of daily, weekly, it's basically stand aside to see if it can continue to go sideways, and then see if it breaks to the upside or to the downside. The Nasdaq, which we covered, and I gave my reasons why I believed the markets should pull back here, especially the Nasdaq since it's extended, was the fact that, look at the prior moves, 7%, 9%, just about 7%, and then it was Thursday with the crack, and, prices began to stabilize here at this little support level. You might be thinking, well, what support level, Greg? Well, this little overlapping opens and closes right there is a support level, because as a tip, when you see a momentum type of move like this, and where you see the opens and closes overlapping each other, you're going to see a base in a smaller time frame. And so, there it is. Right? There's that base or consolidation there. I'll just move that up there, make it a little more clearer. So when you look at an area of support to the left, you look at it as an area. Meaning it's not an exact point. So, you mark it off top, the top and the bottom of the area. And then as it comes down here, and then it's to pivot, and then the retest of the pivot is going to be your high probability entry point. So, you can apply that to any time frame, and that drops like this. You can say, well, overall it's in an uptrend. That's a nasty crack. However, it isn't an uptrend, and we move down to the smaller time frame. We see where the support is, and it creates some support, meaning a swing low, and then the retest. That's your high probability entry on the retest. All right, oil had a nice move last week. Was able to clear that double top and push up into the 200. It's down a little bit here this morning, and and this type of price action is somewhat expected in that it comes down to a major area of support in a higher time frame. So multiple time frame analysis is key to looking for or recognizing high probability reversal points, in this case a downtrend in a smaller time frame but at a major support area in a higher time frame. Right? So now the question is, does it make the next lower high, or can it continue back up, and the depth of the retracement then suggesting the possibility of oil being able to move higher? Okay. Bonds, just really sloppy here. And we talked about the ability to get through here at one point and it looked good, but then the retracement all the way back down to the area at which it started the move negates that potential and bias of moving higher. So retracements are a very powerful and useful tool to being objective and keeping your bias and opinion about what's happened in the past in alignment with what's happening in the moment. So anyone I shouldn't say anyone, but many would see this bottoming action and then move through resistance and the 200 MA as being a positive sign and potentially could move higher. You see the weekly time frame in alignment, and then it just fell apart. It happens, especially with bottoming type of stocks. All right, so we have, let's look at Facebook here, which had the gap and crap. So far, it's just kind of holding up there, so probably needs a little time to move sideways. But tech got beat up quite a bit last week, and even Starbucks, nasty gap down last week. There was a lot of stocks that got hit, even though the markets didn't do much. I mean, pretty much the markets, the S&P, the Qs ended up where they started pretty much. But there was a lot of damage being done in especially tech and what has been strong, like Amazon. In addition, you had the transports fall apart on Thursday in a big way, and they held just above the 200 period moving average there on the daily. But as we look to the left, there's nothing there. So a momentary stall. They're hanging up here. So we've got the transports at some subjective reference point of support. The Qs for the moment holding up. They're holding up after that break. So here, this is the ETF. We got the spiders holding up, going sideways. And if we look at the Dow, everything is just perfect. Chop up, pull back, up higher and higher this morning. So we've got a lot of differences or divergences between different markets that are going on here. And let's just, sentiment. This is the concern right here. You've got too many option traders, wrong way traders at extremes that are betting this market is going to blast to the upside here. And historically, that doesn't happen. Anything's possible, as we all know. But look, it could go sideways. Last time they got this bullish here, the market just chopped sideways and corrected for a month. And that could happen. In any event, that's where we are going into August. Good trading. We'll talk tomorrow.